Okay, we're live. All right, so we're at the audit, IDA LEAC Audit Finance Committee meeting. Vincent Hartley is here. He's the chair of the committee. Committee members Dave Jimenez, John Fielding, Marco Zoldesi will be presiding as the CFO, going through the financials. And the purpose of this finance audit committee meeting is to review the draft IDA LEAC financial statements for submission for the Paris reporting for fiscal year 2024. So Margot's gonna walk you through your financials.
Good evening, everyone.
And we're called into order at 6:35.
First, I'd like to go over the Glen Cove Local Economic Assistance Corporation financial statements.
All right, so the GIC we're going through first.
And please, if you have any questions, please feel free to stop me. I'd like to start on page 4, the management discussion and analysis.
Of which packet? There's 3 packets.
For the financial package.
The financial statements?
Right.
Okay. So the GIC financial statements, page 4.
The financial highlights for the year 2024. The corporation's net position decreased by $384 from $93,908 to $93,524. Operating revenues decreased by $50,000 from $52,000 to $2,000 in 2024. Operating expenses decreased by $49,000 from $56,000 to $6,521. The summary of operations, particularly, we have 2024 versus 2023. We have the operating revenue versus the operating expenses. So for current year, we had 2,000 in operating revenue. That consisted of admin fees of $1,000 each from the Regency and the Keeperman School. It varied from last year because we had revenue of $50,000 that was paid to capital markets advisors. That's why there's that variance. And this year we had administrative expenses of $6,521. The $6,521 consisted of $2,500 for audit, $1,000 for legal, and $2,000 for admin paid to the IDA. Interest income was $4,000. This is $287 last year. So we had a change in net position this year of $384. If you wouldn't mind going to page 9, is the balance sheet. The same as on page 4, just the standalone for 2024.
Page 9. Okay.
We have cash and equivalents of $6,000. Investments of $93,000. So the investments of $93,000 are held in a CD. Accounts payable for $250. Legal fees, accrued expenses $3,500 for audit fee, and unearned revenue for the IDA admin fee. So not a lot of activity for GIC. Page 10 is the P&L. The same as on page 4. Admin fees of $2,000, admin expenses of $6,000. Net change in position of $384. And I'll wait for Ann to come back. I'm not sure if she wants to go over some of the major initiatives. And then if you would mind turning to page 15. There's the detail of the investment account for the CD of $93,000, and that will also be on the investment statement as well. And note 5 is a detailed listing of the conduit debt obligations of GIC. The corporation issued 3 series 2016 revenue bonds totaling $24 million during 2016 in connection with the Regency. And also in 2018,
What page?
for the Tigerman, page 15 and 16. And the bond information, a summary is listed on page 18. So if you wouldn't mind going to page 18, we have the balance at January 2024 versus the balance at 12/31/24. The bonds and notes, the balance was 198, retired was 148, accreted interest is 962,000, and the ending balance of 197 million. So that's a summary of the bonds. So if there are no further, if there are any questions on the paper, please let me know, otherwise I'll start the IDA. Okay, with the IDA, I'd like to start with the management discussion.
So now we're gonna do the IDA.
If you wouldn't mind turning to page 4 of the IDA financial packet. I'd like to go over some of the key financial highlights for the year. So the key financial highlights for the fiscal year ended December 31st, 2024. Total liabilities and deferred inflows of resources exceeded its assets and
Wait,
deferred
what page are you
outflows.
on? I'm sorry.
Page 4.
All right, Vincent, do you have any financial statement?
Yeah.
Vincent, I don't think he's got any. The IDA financial statement, it's the thick one, it's the thick one.
And would you like to go over some of the major initiatives of business? Otherwise, I was going to start the IDA.
I went over the major initiatives during our goals and accomplishments.
Okay.
Meeting with the governance committee earlier today. So
Okay.
it's okay to move on.
Okay.
Yeah.
Thank you. So we're on page 4, right? Of the IDA, we already did the books, so now we're on the IDA financial statements, page 4.
Okay, again, the financial highlights, page 4. For the fiscal year ended December 31st, 2024, liabilities and deferred inflows of resources of the agency exceeded its assets and deferred outflows at the close of the fiscal year by 1.4 million. Net position reflected an overall, I believe that should be an increase of 112,000. Operating revenues increased 73,000 from 214,000 to 288,000. Represented of an increase in admin fees and escrow expenses, meaning escrow revenue comes in and escrow expenses go right out. So, and operating expenses increased by 39,000 from 390,000 to 430,000. The net position, the balance sheet for the IDA is listed from 2024 to 2023 as a comparison. Current assets were 761,000 versus 829,000 in 2023. Non-current assets 470,000 versus 259,000 in 2023. So total assets went from 1,089,000 to 1.2 million from 2023 to 2024. Total assets increased 142,000, 13% from 1,889,000 at December 31st, 2023 to 1,235,000
We're on page 5 now.
at December 2024. In 2024, cash and equivalents, restricted cash and investments accounted for $1.1 million, which is 94% of total assets. In 2023, cash and cash equivalents accounted for $1,010,000 or 93% of total assets. Total liabilities increased in 2024 by $162,000 from $2.39 million to $2.5 million in 2024. A summary of operations is listed below of the operating revenues and operating expenses from 2024 to 2023. If we take a look at the operating revenue, fees and other revenue, we have $288,000 versus $214,000. Part of that is due to increase in admin fee revenue, which includes admin fee revenue and consent fee revenue, and also an increase in escrow expenses for legal fees. Again, the revenue comes in for escrow revenue and paid admin escrow expense. Operating expenses for salaries and benefits went from $216,000 to $194,000. That changed due to some accrual entries for pension and OPEB. We have contractual expenses, which consists of legal and other escrow fee expenses, went from $230,000 in 2024 to $126,000 in 2023. Depreciation expense is minimal, $608 in 2024, and redevelopment costs not recoverable, $4,528. Interest income from last year in 2024 was almost $30,000 compared to $18,000 in 2023. So the ending net position is $1,428,121. The next note, a majority of the agency's revenue are derived from administrative fees. Total revenues increased by $73,000 from $214,000 to $288,000, while expenses increased by almost $40,000 from 2023 to 2024. The net position went from negative $1,428,000 from $1.3 million in 2023. If you wouldn't mind going to the next page, page 6 is a listing of the fixed assets, which have been fully depreciated, $14,000, fully depreciated $14,000, the net is $0. Let's see, page 7 sorts the major initiatives of the IDA. And would you like to go over that, or that was covered?
Well, it was covered during the governance meeting, but, I can go through this quickly. Any updates regarding RSR's projects were added in here. Notably, the conveyance of Block D parcel from IDA to RSR occurred in summer 2024. Total number of full-time equivalents in 2024 was 115 versus 147 reported in 2023. So that did go down a bit in 2024. Pilot revenue received in 2024 by the Garvey's Point Bond Trustee was used to pay bond expenses only in accordance with the indenture. No pilot revenue was received by the affected taxing jurisdictions in 2024 for Garvey's Point. The IDA board consented to a change in trustee for the Garvey's Point bonds requested by a majority of the bondholders in 2024 from Bank of New York Mellon, the former trustee, to UMB Bank, which is the current trustee. Georgia Green Ventures, we see the reflection of that project going from a construction phase to an absorption phase. They reported 215 construction jobs in 2023 for 55 affordable rental units. While this year in 2024, that now reflects the one full-time equivalent of jobs post-completion. And I'm on page 9, moving to page 11 now. The Village Square is fully leased. As of 2024, Village Square's available commercial space is fully leased, and their full-time equivalent jobs reported are 57. The Regency, I'm still on page 11, the Regency is also a GICLIF project, as is Garvey's Point, and we're reporting the same information. The Regency reported 75 full-time equivalent jobs in 2024. Moving to page 12, the villas. As of the end of 2024, the project has a forbearance agreement approved by the IDA board with an extension through February 5, 2025. Various milestones were set by the board for the developer to fulfill in accordance with the resolution approved December 10, 2024. The City Council approved an extension of the building permit to December 2, 2025. Glen Cove Villa LLC reported 81 construction jobs in 2024. Does anyone have any questions on the major project initiatives? So I think we're up to page 13. And this reflects an organization chart that's going to be updated.
Sure. Okay, if you would mind going to page 14, that's the balance sheet of the IDA. I'll just briefly go through each category. Cash and equivalents are $111,000. Investments are $605,000. Accounts receivable $38,000. Prepaid $5,000. The restricted cash is for the $438,000 went up by roughly $200,000. That's for the Garvey's Point HOA to fund future capital repairs for the homeowners association. Deferred outflows and inflows are for the pension and the health insurance, OPEB related. Accounts payable $86,000, accrued expenses $12,000 for an audit fee. Compensated absences of $3,000. The non-current liabilities consists of, if you go up top, there's restricted cash of $438,000. The non-current liability is also reflected as an asset and a liability. That's $430,000 for the Garvey's Point HOA. The net pension liability in OPEB, net pension is $54,000. OPEB is $934,000. The net position at year end is $1,428,121,000. If you wouldn't mind going to the next page, page 15, we have operating revenue that consists of admin fee revenue and escrow fee revenue. Operating expenses of the IDA were salaries and benefits of $194,000. Contractual expenses would be for escrow expenses such as legal fees. Depreciation $608 is minimal. We had a current year loss of $142, but we had interest income of $29,000, almost $30,000 on CDs, so the change in that position is a loss of $112,000. The next page 16 is a statement of cash flows, and if you wouldn't mind, I'd like to go through some of the notes. On page 21, the deferred inflows and outflows on the balance sheet. I'll just read through some of this. In addition to assets, the statement of financial position includes a separate section for deferred outflows of resources. This separate financial statement represents consumption of net assets that applies to a future period and will not be recognized in an outflow as an expense until then. So that's the deferred outflows and inflows. The agency has reported deferred outflows of resources and deferred inflows of resources in relation to the pension and OPEB. Getting to the next note, long-term liabilities, the capital improvements deposits. The Garvey's Point Homeowners Association is responsible for setting aside money for future capital repairs. The net pension liability, the asset.
Margo, on that one, let's just add the word Garfield Point Master Homeowners Association. Just because there's another homeowners association that falls under the master, so
Okay.
yeah. We don't have to change the acronym, just Garfield Point Master Homeowners Association.
Okay.
Thank you.
The next one is the net pension liability. The asset, the net pension liability, represents the agency's proportionate share of net pension liability of the New York State and local employees retirement system. Other post-employment benefits, OPEB. In addition to providing pension benefits, the agency provides health care benefits for certain retired employees. Okay, and that's according to GASB 75. The next page, page 22, compensated absences. The liability for compensated absences includes salary-related payments which have been earned for services for vacation and sick time. If you wouldn't mind going to the next page, page 23. If you wouldn't mind looking at note 3, the investments. Those are the CDs held by the IDA. So there are 2 CDs, one for $555,000 and $50,000. One of the CDs is actually drawn down to cover operating expenses. Note number 4, land held for resale. The IDA owns a parking lot in an area located between Arts Village Square, which is maintained by the city, at $31,650. If you wouldn't mind going to page 24, restricted cash is that part of the Garfield Point Master Homeowners Association for capital improvements. Note 6 is capital assets, which would be the fixed assets. The assets on hand have been $14,690, less accumulated depreciation, so the value is $608. Actually, that's been fully depreciated. That was the beginning of the year. The ending net asset balance is 0. So your fixed assets less accumulated is 0. On page 25, there's a good summary of the long-term liabilities. The change from January 1st, 2024 to December 31st, 2024, which includes all the long-term liabilities, which would be escrow deposits, capital improvements, due to the CDA, compensated absences, the net pension liability, and other post-employment benefit obligations. So the balance at the beginning of the year was $2.3 million. The balance at the end of the year was $2.4 million. Just a note on compensated absences, accumulated unpaid vacation, sick pay, and other benefit amounts are accrued and incurred. The agency had compensated absences for accumulated unpaid vacation and sick pay of $28,000. There's a note on the pension plan, New York State and local employee retirement system. If you have any questions on that, please let me know. There's some more notes on page 26. And according to OPEB, there's an actuarial valuation. So again, that's listed in some of the notes in greater detail. If you have any questions on that, please let me know. Going to page 29, there's a good note on other post-employment benefits. In addition, so in addition to providing pension benefits, the agency provides certain health care benefits for retired employees through a single employer-defined benefit plan. So there's some information on that. And the valuation for that, some more extensive notes on page 30. And on page 34 is a detailed schedule of the OPEB liability. So the OPEB liability from 2023 went from 1,015,000 to the end of the year 978,000.
34.
And you can see the variation from 2021 on here, from 1,892,000 to 978,000 in 2024. And I'd like to go over the other supplementary information starting on page 38, which includes the IDA projects and the bond information. On page 39 is a listing of the bond information. The balance at January 1st, 2024 was 170,236,000, with the amount required and the accrued interest. So the balance at December 31st, 2024 is 165,874,332.
I'll just quickly just add, that drawdown was a result, if you recall, of the stabilization fund being used this year in the bonds, which allowed roughly 5.3 million to be redeemed in that series of bonds, with the rest going into the turbo redemption.
Okay, thank you. If you wouldn't mind going to page 41, this is a list of all the straight schedule of indebtedness straight lease transactions for all the projects. Total amount of the lease, and then the tax information is listed on page 42. But to go over that, I'd just like to go over page 45, which is basically a summary of that, which is a listing of all the projects, the total pilots versus the schedule of exemptions. The schedule of exemptions is the total tax. So for the Regency, it's their total pilot, for example, is 502,000 versus the total tax of 522,000. The pilot is broken down between the county, the local, and the school.
And just to add to this, we're required to do this for the state for our Paris reporting. However, just keep in mind that it's a little bit misleading from the standpoint of we're comparing what they're paying in pilot to a condition where there is no pilot, quote unquote, the exemption, but for the pilot, the project wouldn't have gotten built, right? So it's a little bit, it's a little bit, you know, a strange number, but it's something we do have to calculate and report, and Margot does put a lot of work into that, as does Amy Franklin in finance, so we appreciate that, but just take these numbers with a grain of salt.
Okay, and just a note for, we have a pilot amount on there for RXR, but the pilot payments were actually,
You're on page 46, right? Oh no, we're not on page 46.
page 45.
We're still on 45, okay.
The pilot payments for RXR were actually applied to bond expense.
Right, none of the county, the local, and the school did not get any of those payments. It all went to bond expense. Margot, I'd like to add a note here on this page, on page 45, to have a star next to RXR Garvey's, and then again, that note that we had put, I think, in some different schedules that said all actual pilot revenues received went to bond expense, because I wouldn't want someone to see this page alone and think that those amounts went to the taxing jurisdictions.
Okay, keep in mind on the supporting schedule, it says 0 for RXR.
I agree with you, but if someone was to take this page out of context, out of this audit report, and see this without the note.
Right, we'll add that note.
Thank you, I appreciate it.
Okay,
So all actual.
Please note that all actual pilot revenues received paid for bond expenses for bond expense. No pilot revenues were received by the affected taxing jurisdictions. And Mario, I'm sure it's very similar to that note we originally had, discussed with Eric, and we have elsewhere in here. So sometimes pages of things are taken out of context. That's the only reason why I just wanted to have that clarified. Thank you.
Okay, so the total pilots were 7.7 million paid to the county, local, and school, except for RXR and Georgia Agreed, versus the schedule exemption for total tax.
That's a good point. So we actually have to put asterisks on both RXR Garvey's and Georgia Green for that note, not just Garvey's. That's right.
RXR parties and Georgia.
Correct.
Too.
Yep. So if we have asterisks on both of them and we just carry the note down to the bottom of the page, it should suffice.
Okay, if you don't have any questions on this, I'd like to get to go to the next page, 46, and go to each one individually. Okay, the first one is the Regency. There's some notes on there, and also separately listing the pilot versus the exemption, which is pretty much the same as what was on the prior page. And also, the Regency had a total pilot of 502,000 and reported 75 FTEs. The next one, Fairfield, had a pilot of 1.7 million. And in 2024, 13 total FTEs were reported and 8 retained, 5 created. Then on the move, please keep in mind this was terminated. The Natterberg TDG, total pilots 77,000. In 2024, 30 FTEs were reported. If you wouldn't mind going to the next page, 48, Fair Housing had a total pilot of 74,000 versus a total exemption of 178,000.
And we'll change that from 0 to 1 because they did submit documentation for 1 FTE, so that would be changed. They are obligated to 1 FTE for their salaries.
Okay, keep in mind for 50 Glen, that's ending.
Although we are going to be closing with 50 Glen any day now on their new pilot that was approved. So.
Okay, and as mentioned for RXR, there's a note here stating that
So yeah, on page 48, I actually had added the language in here that talks about that use of the stabilization fund. So it's detailed in here. Again, 5.31 was transferred from the stabilization fund back to the turbo redemption fund to partially pay off the Series D bonds. The stabilization fund is now completely expended, and this was a one-time event.
okay, and then on the next page, the pilot there is listed as 0.
Where is that, Margot?
On page 49.
Where is it listed as 0?
Well, the pilot page, the county, local, and school on the chart.
Not on this chart.
Not on this chart. It's still unclear because it says payments made by RXR Garvey's, and it just has the pilot payments with the school, the county, local, and school.
You know what? I have the first edition. It wasn't on there. Okay.
Okay, so this is definitely.
I made
Okay. Okay, so that pilot payment.
So it should be 0 because, again, all the payments went to bond expense. This shows what it would have been if we had had the revenue to pay it off for the schedule, but we didn't, right?
So this, what we're all looking at is the revised. So the
Okay,
revised
so
is
they
wrong.
have, so we take those out or leave those in? For the
If
pilot?
we leave them in, we need to have the same note for adding to the
Okay.
other page.
So let's just leave it in and we'll add the note.
Yes,
Okay.
please. It's a little bit misleading. I mean,
There's gotta be something that they can present. like,
yeah,
that's
I mean, I understand why we're breaking it down because we're showing what the exemptions are. But again, it just needs to be made clear that the affected tax jurisdictions did not receive these amounts.
Or maybe just put a total amount and say the total amount was paid.
Right, the total amount that went to bond expense versus the total amount to exemption, possibly, yeah,
Okay,
yeah.
Right.
I know, we went back and forth with this a bunch of times, it just needs to be clear.
Okay.
It's not clear the way it is now.
okay.
It almost has to be like eligible pilot to these two jurisdictions. What was actually paid is zero.
Right.
With a note that went
Right,
on. And
right.
then,
Yeah, or, right, if it says scheduled pilot instead of pilot, Margo,
Or eligible pilot.
or eligible pilot,
Yeah.
you know, I don't really know what the right word is, but, and then it needs to be clear that it all went to bond expense.
Okay.
Thank you.
Okay, and getting on to the next one, Michael Portillo, total pilot of 61,000 versus a total exemption of 353,000. In 2024, 5 FTEs were reported. Getting down to the next one, Orange Village Square, total pilot of 194,000 versus the exemption of 1 million. Reported a total of 49 FTEs.
57?
57 FTE, 49 created, 8 retained, with a total of 57. Getting to the next one, Livingston, 135, Glen Cove Avenue, pilots of 161,000 versus exemptions of 157,000. The company reported 81 construction jobs in 2024. Getting into the next one, Arcadia is now closed with the IDA. Georgia agreed, the same thing. The pilot payments went to bond expense.
Yeah, so we'll have to add the same note here and maybe add either eligible or scheduled pilot, Margo. And then add that same note.
Okay.
Because I understand Dave's point about, you know, being clear. Oh, and actually, I guess we could leave it for now, but Georgia Green's new corporate address is actually down at the waterfront now. They moved to RSR's, old building, but I think they moved it, we'll just leave it and we'll like the change next time.
Okay.
Yeah.
And, on the schedule of cash and investments.
So that's this next packet, right?
It just lists the cash and cash equivalents, the restricted cash, and the IDA investments. So the cash is 111,000, restricted cash.
It's page 3 of this new packet, schedule of cash and investments. So this one? Page 3. Dave, do you mind showing Vincent the yeah, thank you.
Thank you. No problem.
Page 3, Vince.
Okay, keep in mind that the restricted cash for 438,000, that is part of the RSR Master Homeowners Association. And the investments are the CDs held by the IDA. And the details of the IDA investments are on page 5. These CDs held totaling 605,000. So just as a recap for the IDA, the revenue was 288,000 versus the expenses of 430,000. A net loss and interest income of almost 30,000 and change in net position of 112,000. So please let me know if you have any questions.
Are we going over any of the TKF or
Sure.
if there's anything of note? I don't know.
Okay, in terms of, adjusting journal entries for Giggling, during the board meetings, I had mentioned during 2024 that there was a fee for capital markets advisors accrued for 55,000 I had on the book.
Are we in the GICLIC PKF?
Yeah, I went to
Okay.
Giggling. That's page 15.
15?
So that was one adjusting journal entry.
Right.
And again, that was mentioned during the IDA Giggling board meetings during the year.
Yeah, unfortunately, we still haven't received that 55,000 that RXR said we would be paid by March 1. But the expense was accrued in 2024, which this is reflecting that. It
And
has
the
not yet
auditors,
been paid.
the auditors made the determination to just book that in 2025.
Right, which I think makes sense at this point.
Okay, so that was, the entry for Giggling.
And then are we in the IDA one now, Margot, the IDA PKF?
Yes.
Okay.
Okay, are there any entries?
I don't know. Let's see. Doesn't look like it, actually.
Okay.
Ooh, good job, Margot. Well, good job on everything, but.
Take a little wins while you can.
Yeah, definitely. This is quite an undertaking.
Yeah, no, it
Becomes Margot's life for a couple of months. Yeah, especially with the 4 different entities, it's a lot.
So we ready to wrap it up? We have any questions?
All right, so if there are no other questions or comments, I would ask Margot Zoldesi to prepare the final reports for approval by the IDA LEAC board at its March 27th meeting for submission to the authority's budget office on or before March 31. Meeting adjourned at 7:17 p.m.